Welcome to The Explainer, where we break down the big stories behind the numbers. And today, we've got a fascinating one. We're looking at a healthcare giant, Eli Lilly, that seems to be playing chess while everyone else is playing checkers. So, how does a company that's been around for almost 150 years suddenly become the hottest name on Wall Street? I mean, we're talking about joining the trillion-dollar club here. This isn't just a small jump. Well, the secret? It's all about a revolutionary new class of drugs. And it all leads to this moment, right now. The big culmination of their entire strategy has just launched. We're talking about a simple pill, one that could completely change the way we fight obesity, and honestly, lock in their dominance for years and years to come. All right, so here's how we're going to break this all down. We'll look at how they got to be this dominant force, what the stock's story is telling us, where they're placing their next big bets, and of course, the risks that could totally upend their game.
Okay, first up, the trillion-dollar drug maker. Let's just get a sense of the sheer scale we're dealing with.
And when we say dominant, we mean dominant. As of right now, in 2026, Lilly isn't just another player. They're basically running the show, controlling a massive 60% of the entire U.S. obesity drug market. That is just staggering.
So, the big question is, how did they do it? How did they pull off this incredible market takeover? Well, it really comes down to this brilliant strategy, a revolutionary 1-2 punch.
Okay, so punch number one was a total scientific knockout. We're talking about their injectable drug, Zepbound. What made it so special? It uses something called a dual-agonist molecule. Its main competitor, Wegovy, only targets one receptor. Zepbound targets two. And in head-to-head studies, that made a huge difference. It just proved to be way more effective for weight loss. So what does dual-agonist actually mean? Well, think of it like this. Instead of just flipping one switch in your body, it flips two. It activates two different hormone receptors. This tag-team approach doesn't just tell your brain you're full, it also helps your body regulate blood sugar and slow down digestion much more effectively. It's a completely new standard for this kind of treatment. And then comes the second punch, the follow-up jab, Foundayo. This is their brand new pill. And you know what? The genius here isn't just the science, it's the convenience. Look at the competitors. You have to take their pills on an empty stomach, then wait 30 minutes. It's a whole routine. With Foundayo, you can take it whenever, with or without food. That might not sound like a big deal, but in the real world, that is a massive, massive advantage.
All right, a revolutionary 1-2 punch is great, but what does the ultimate scoreboard, the market, have to say about all this? Let's decode the stock story.
And wow, the financials are just incredible. Just look at these numbers from the last quarter of 2025. Total revenue up 43% year over year. Net income up 50%. You expect to see this kind of growth from a hot new tech startup, not from a 150-year-old pharma company. It's absolutely off the charts.
So where's all this growth coming from? Well, it's pretty clear. It's almost entirely powered by that 1-2 punch we were just talking about, the Tirzepatide franchise. You've got Mounjaro and Zepbound, and together they brought in nearly $12 billion in a single quarter. That's the engine driving this whole train.
So if you were an investor who got in on this 5 years ago, you are very, very happy right now. We're talking about a 411% return. Look at that chart, from about $182 to over $900 today. That's just incredible performance, a real testament to how Wall Street has bought into this story. But, it's not always a straight line up. Right now, the stock's in a bit of a tricky spot. It's hovering right around this key support level of $930. Now, for traders, that's a really important number. It's a floor where buyers have stepped in before. So everyone's watching to see if it holds. The resistance, or the ceiling, is up around $954. But look at that analyst target. They're betting it's going way, way higher. Okay, so they've conquered obesity. Game over, right? Not even close. A true giant never just rests on one victory. Let's look at what's next. Lilly's next big bets. And they are not thinking small. They're making huge strategic moves into three completely different but massive areas. First, Alzheimer's, where they already have a drug on the market and another one coming. Second, they're aiming to conquer neuroscience by buying up other companies. And third, they're jumping headfirst into the future by using AI to discover new drugs faster. Just look at this Centessa acquisition. They spent nearly $8 billion on it.
Now, that's not just to buy one more drug. This is a calculated play to own an entire category of treatments. They're going after the root cause of narcolepsy, the orexin system. If this works, it could be the best drug of its kind, period.
Okay, but it can't all be good news, right? Every king has enemies, and every throne is under threat. So let's talk about the risks on the horizon for Eli Lilly. And there are definitely some big ones. The analysis points to 3 key threats. You've got political pressure. Washington is always looking at drug prices. You've got competition heating up, with rivals cutting prices and new drugs entering the market. And then there are the long-term health questions about these GLP-1 drugs that just haven't been fully answered yet.
Let's take that political pressure, for instance. There's this most favored nation policy being talked about, and the goal is pretty simple. It would force U.S. drug prices to match the lowest price paid in other developed countries. If that happens, it could take a huge bite out of Lilly's profits, a really big one. So you've got this amazing strategy on one side, and these powerful threats on the other. What's the end game here? What's the final call?
Well, according to the analysis, the conclusion is pretty clear. Even with all the short-term volatility and the real risks we just talked about, Eli Lilly is seen as a strong buy candidate for the long term. Why? Because their fundamental strengths, their research pipeline, their market strategy, are just that good. The thinking is that this trillion-dollar valuation isn't the finish line. Nope, it's just the start of a whole new chapter.
Which really leaves us with the ultimate question, doesn't it? They've made this incredible, revolutionary move. But with all these powerful new threats on the board, is Eli Lilly's reign really just beginning? Or is the king about to be checked?